The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out here with the all-time favorite stock of everybody, Apple Computer. And iPhones or whatever else they have. But let's just go through a little theory here, and then we'll talk about where we are in the market now. This stock gets more free advertising than any stock I have ever seen. It's just truly amazing. But remember that everybody that bought this stock during 2015 lost. Because if you can see, going back to January of last year, it was trading about 105, and right now we're trading, as we come to the market this morning, around 96 and a quarter. You'll see it made a beautiful double top pattern up there in April. You can see the triple top pattern that was made from February through July. The real key was you'll see the big ABCD pattern that happened into August 24th. In fact, that one we were talking about on the air that day, that that Apple looked like it would be a good buy somewhere below 100, and of course it got to 93 that day before reversing, and then it went up to the 786 retracement. Now, folks, this is happening all during the time that we're getting news on it. I mean, these are just charts. It's just technical analysis, but it does a really good job of describing, what's really happening, with the stock. And it's pretty much just told you that there's been a problem somewhere. I mean, they have $180 billion in cash, and yet they're still down. There has to be a problem somewhere. And then we had the earnings come out last night. It was the first time in a decade that they didn't increase earnings over earnings, I guess. I don't understand any of that fundamental stuff, but, that's neither here nor there. But now we're coming into a really interesting time, because if you'll bear with me here, and let's use our imaginations just a tiny bit here. Look at the far right side of the chart where we are now. You saw we made a bottom here down on the 20th with the rest of the market when Apple hit 94, which was the exact price level that one of our folks here in the den, Peak D, was talking about. He hit that spot on. He actually missed it by about 99 cents, but we're not going to throw him out of the room just because of that. That's a pretty good spot on thing, so keep your sense of humor, Peak D. Okay, now here's where we are. If you look at this pattern, you can see the left shoulder that happened in January. You can see the head that happened on January the 20th. And here what we have coming in now is we have this 61% retracement coming in right around 96. And so, buying it here at 96 with a stop at 92 is far better than anything else that you could possibly ask for. So this is a head and shoulders pattern. I had this on the 30-minute chart, but folks, being computers the way they are, as I come on the air, I lost the puppy. So just pay attention, to Apple today, watching it when it's open. It's going to be a weaker than market stock this morning because, the news is out, and what they do is they follow the news, and the news follows the trend, folks. Believe me, it does. Now, we've gotten some bearish news on Apple. I mean, why wouldn't you reverse on bearish news? It's had bullish news all the time, and none of that worked. So now you've got a technical pattern. Head and Shoulders, one of the favorites of Andrew Lowe from MIT and many other technicians like, John Murphy, myself. I like Head and Shoulders patterns because, they give you time and price to put your stop in. So you got a $96 stock and you only have to risk $3 on it. That's less than 3% or right at 3%. So that's something that, keep in mind today to watch this because, the market is actually holding up pretty good. China was down again, and it literally, turned the well, it stopped going down a little bit, and so that turned the DAX earlier this morning. And then what happened? It also turned the stock market. Okay, we have to pay attention now because we are at the what they called it, proverbial memento of truth, as they say in whatever language that is. Okay, we're going to put this up here. Take a look at it. This is this pattern that we had. This is this neural net prediction. What did I put up? Wrong chart. Uh-oh. What did I put up? A wrong chart? I do that all the time. I wonder what chart I put up. Okay. Did I put the Apple chart up? Please, I hope I did. You know, boy, that'd be a really bad sign. Are you kidding me? Did I not put the Apple chart up? Oh, dear. How do you spell resign? RESINGE, something like that. Oh, let's start over again, boys and girls. God darn, boy, getting old sucks, let me tell you. All right, give me a second here. Get the Apple chart up. Boy, oh boy. Now let's see if this is the Apple chart. All right, you heard me talk. Anyway, look at the right side of this, folks. What I'll do is at the break, I'll try to do a chart and get it in here and show you the head and shoulders pattern on this thing. But this is what's happening. You have a head and shoulders on the far right side during January. You can see the spike down we had on January the 20th. That was the head, the left shoulder. You can see the right shoulder's forming now. And as long as it doesn't get below 93, it looks like it could be okay. If it gets below 93, then you'll form a 3 drive to a bottom pattern, and you might even take out that low that we made at 92 way back in August. We'll see if that's the case. Now, last night, when the news first came out, the traders to be thought that it was very bullish, and they pushed Apple up to the 103, which was absolutely amazing because the guys from Thinkorswim, when they were talking about on the program for TFNN yesterday, that 104 area was really 104 to 105 was really a critical resistance area for options, and of course it goes to 103.90, which is pretty much spot. So the people that are doing the options are the best things to to really look at. Okay, let's get back to the to what's going on right now in the market, and that is the gold. And we got to look at this really closely. This program that Larry Edelson's done, this neural network, which is basically a pattern recognition type program and also related to cycles, of course. But as you can see, we have an ABCD forming on this. This was given to me back in late November. And as you can see, the bottom came in on December the 28th. And then we had the ABCD pattern that has been absolutely spot on. Right at the beginning of January, the market was trading at around 1055, 1060. Then we had the rally up into where we are right now. And this was on the 25th. Of course, today's the 27th. Yesterday's the 26th. Boy, you think I'm not good in mathematics. Whoa, I got this puppy figured out. Anyway, we've completed the ABCD and some of these things. So we want to watch this closely because this has worked pretty well. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to be talking about gold and silver here for just a little bit because we are at the proverbial moment of truth in this puppy, as near as I can tell. And what we'll do here is to look at this. We're going to look at the silver first. Well, silver first, and then we'll look at gold also. But as you can see, silver has taken out the highs from December. It's also completed a three-drive pattern, a butterfly. So we're up at this 1455, 1460 level that we hit. You know, the timing is such that it could be pretty close to a high based on what the pattern is looking like. And so we want to watch this very closely from a technical standpoint of view because it lines up so very nicely. Now, the next one I wanted to show you, which is one of the sisters of the precious metals, of course, is the platinum market. And if you'll notice here in the platinum, I did this last night, and we actually we made a higher high than yesterday by $0.50 in platinum, and now we're trading about $5 below that. That was the 786 of the move from back in January, and as you can see, the gold has completed the ABCD pattern on the way up. So platinum is lagging a little bit. Now here's the one that I like the most. That scares the living bejeebies out of me, and if this one fails, folks, you got to get on board this because this could really be the sleeper. And right now it looks like something on the bottom of your shoe, and that is the silver market. Look at this, folks. We've had a market that's gone from $18.60 an ounce down to $13.60 an ounce. And all we've been able to do since December the 14th, which is 7 weeks ago, is to rally to a 382 retracement exactly at 1458. And we're trading at 1448 right now. And so that's a 382 ABCD move in a downtrend, and we stop and think how weak this is, you have to be really scary here, or be afraid, like they say, be afraid, be very afraid. But the thing is, if it fails, then you've got something, because now this thing is going to turn, and it could really, move pretty good. But the fact that it's gone 6 weeks with virtually nothing, we can't even take out the December highs, for heaven's sakes, and we did that in the gold market, and so this is looking a little ominous in the silver market. The silver should be trading based where gold is. Silver should be $1.50 higher at around $15.80 per ounce, based on where it is right now. Now that's just from a technical, standpoint. I don't understand the what do you call it, the fundamentals of the stuff, but let's take a look at the gold silver index, and dear, I want to show you that one also, because it's been far weaker. And give me 1 second to put that up, and I will have the Apple chart for us at the break if it's delivered to me, because for some reason my emails are not sent to me immediately like most people do. They run them through a washing machine, I think. So we'll watch that. But anyway, you can see here that the gold silver index is still in a severe downtrend. We've had a little bit of a bounce these last 5 or 6 days, but it's a very, very minor bounce, and so you don't want to disregard that. But it's telling you there's some factors here that's telling you that gold is not looking as bullish as it should be, given the fact where we are with platinum and silver. That's another thing that we have to contend with. So let's watch it and see what's going on with it. And I wanted to show you the shorter term one for the XAU, because all we've done with that is we've made a 61% retracement of last week's high, and that's another thing that makes me wonder if this is in fact a really key spot where we have to be extremely careful. So the big thing on the watch list today, from my standpoint of view, is the S&P, because it's the gold and silver, and we want to watch those, because if they start down, it's going to be two things. We might be looking at a really good bottom come around the second week in February, around February 9th. In fact, that comes in right at the Chinese New Year, and that'll be a new moon, and it'll be very, very interesting, as they always are in those lunar cycles. So it'll be fun to watch. Anyway, okay, now I do have the Apple chart up here. I want to show it to you, because this is what we have going right now. It's been so far, it's done exactly what it's supposed to do. Just give me 1 second to bring it up here to show you folks. You'll see that this is what we were talking about. You can see that big spike that we had last night after the report. Some lucky fellows were able to run it all the way up to 103.60, and then in a matter of about 2.5 minutes, it's trading down $5, and it drops another $5 down to the exact 786 at 95.68, and we've rallied $1 off that bottom. But that is a perfect head and shoulders bottom, folks. You'll see the low on the 7th, you'll see the low on the 20th, which is the head, and then you see the right side on the 27th, which is the exact spot where we have the right shoulder coming in, and that should be the bottom. So your risk here is very small. Whether that's going to work or not, I don't know, but that's a head and shoulders pattern. I mean, you can't. That's just absolutely a perfect one. You can't defy that. We're going to be opening here pretty soon. Looks like we're going to be rallying a bit after we were down over 100 points last night, 120, I believe, in the Dow last night, and we got quite a bit of that back. So far, the bottom is holding in. We've had some bad news, and the market is held up. The bad news basically coming out of China, with the market down 7% on Monday. It was down again on Tuesday. It finally had a small update today, I believe, was the final close. But the other markets, the London market and also the DAX, have all held up. relatively well. They didn't even have a 382 retracement in the DAX, so that's pretty good. On the news front, tomorrow we're going to have my mentor, John Hill. He's going to be 90 in a few weeks. He's going to be on. We're going to be talking about some trading systems, what he does at Futures Truth, and just some other historical things that you might have. John has a fabulous library. He took me under his wing in 1970. I met him up in San Francisco the first time. We became fast friends. I visited him many times in his home in Henderson, North Carolina at the ranch, and we'll see what's really happening. Dennis, you got a really good idea of what double tops and double bottoms are, my friend. So that's a good sign. Just start moving it head and shoulders, and you'll move one step closer to technical analysis. Some of these guys in this Tiger TV room should be Rodney Dangerfield lookalikes, because they get to be pretty funny in here. On Tuesday, we're going to have another special guest from historical purposes, and that is Stan Harley. Stan has been around forever. I met him when he was trading at Conti Commodities back in the 60s and 70s, so I've known him 40 years, and he's really a very good cycle guy, does a tremendous job, and he's going to be our guest on Tuesday, so we'll be able to see what we have with that. So that's what we have going on right now for next week. So we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to talk a little bit about crude oil here because we've had a pretty good run. You know, we went from 28 and change up to the $34 level, a nice 12% move. And what's happened now is that yesterday we pulled back to a 61% retracement, and then we had a really strong rally. So this market is trying to make higher bottoms. It really looks like that. I mean, the whole world is still very, very bearish. It's sort of the wicked stepsister, or the exact opposite of what they did to Apple. Remember, they talked how wonderful Apple was for a whole year, and now it's lower. And believe me, they have been beating even our cat here at the house. Well, we don't even have a cat, but if we did have a cat, he would also be telling us that crude oil is going to go a lot lower, and maybe it will. But I think we're going to get one heck of a rally, before it's before it's going down the hill. We have a bunch of stocks that are opening lower. It looks like the Apple's going to open right at that 786, and it might fail that, but it should have some support at 96 in the Apple. We'll wait and see if it does. But we're having higher lows now in the crude oil, and we've had a couple of small higher highs after that 12% run. So we'll watch it. We'll watch it rather really quickly. So we'll see what's going on with that. Okay, now. The next question that someone had in the room was the ABCD pattern in the silver that we mentioned. And folks, that is all I can tell you. Just from a technical standpoint, what we're looking at here is, let me put it up here so we can see it again. This is worth looking at it, because if you stop and think, we bottomed on December the 14th, and we've gone 7 weeks now without a bottom. If you go back to where we were in August, look at that. We bottomed in August, and then the next 7 weeks. Just about the next 8 weeks, we went from 14 to 16.40. We rallied $2.40 an ounce, and here we have not even been able to rally nothing more than 80 cents an ounce. That's only a 38% retracement. That in itself is a bearish pattern, folks. I don't know any other way to interpret it. Now, this could change in a heartbeat if we get these big moves, a big spike to the upside. Then 30, 40, 50, well, it had to be 40 or 50 cents, getting it above 14.60 an ounce. Then I'd say, yep, she's breaking out, and then it's on its way, and gold could be heading towards that 1130 area if it's going to do that. So we'll see if that's going to be the case, and we'll see if that is it. Someone's asked if that is a head and shoulders pattern on the silver, and let me just pull it up one more time, and we'll walk through it together just to see that we have this. And I'll point this to you. The head and shoulders pattern, Dr. Scott, would have come in from the low in November to the low in December, and then the right shoulder would have happened on January. But if that's the case, if you look at that January low, if you can see a beautiful ABCD pattern. Of course, we pointed this out when gold was hitting 1055. There was a beautiful ABCD pattern also at that right shoulder in silver down at 1380. So, but right now, I believe that what we're looking at is an ABCD Gartley at a 382. And believe me, I own physical silver, so I don't really care if it works or not, because I'm not involved in the short side of silver. I am on the short side of gold a tiny bit, but that's neither here nor there. So we'll see what really happens. We were talking about this gold yesterday, just on a shorter time frame, and we did get up to 1123 in the gold, and that is pretty close to what we were looking at here in gold for many weeks now. We've had this well, something's beeping here. The alerts are coming on now. It's probably Apple. Hold on just a second here. But you can see here in the gold, possibility at 11:30. We got to 11:24. That's within $6. That's pretty close to what we're looking at. Let me turn this. Yep, it is Apple at the 786. So we're going to see if it's going to have any guts at all here to hold up at this level. We'll look at it right now. It's trading right there right now where it opened. So we'll see. I'm going to turn this limit minder on. What I do is I put limit minders on, and then that hits what we're doing. Someone asked me a question. I had a great relationship. He was my best friend. He was best man at my wedding. The number one guy in my book, his wife married us, as a matter of fact, was Mark Douglas. And Mark was a big fan of Amos Hofstadter. He never got to meet Amos. I was fortunate enough to meet Amos back in 1973. But the main thing is that when you're doing this, the main reason why people have trouble trading is for two reasons. One is they don't perceive an opportunity. They don't perceive, an opportunity. They really don't have a plan that say, yeah, this looks like a good idea. Apple's a perfect example here, folks. This might be a dog-eared trade, but it's got everything there that you could ask for. I perceive an opportunity. I look at my methodology. That's the second thing. My methodology says I'm looking at a head and shoulders pattern, which statistically we'll know will work 70% of the time. Remember, it's going to lose 30% of the time. It's got all the numbers fitting up perfectly. So that's what we're looking at. Now, whether that works or not, I don't know, but that's what we're looking at. So the three things that you need to do when you're getting ready to trade, you got to ask yourself these three questions. This is from 25 years ago at a seminar that Mark and I gave in Chicago. Is it a valid signal? Yep, it's a valid signal. How much do I have to risk to see if I'm right? $2 a share. And if can I accept the risk on this, then I must take the trade. Correct? And so that's what I have to do. And right now it is losing. So much for this. Back on to the 400-day moving average. Actually, the buy was at 95.56, and we're trading at 95.57. So the loss isn't too bad now. It's only 3 cents, but it could get a lot worse. But this is what we're looking at. It's got everything that you could ask for, mother God and country type stuff. So whether it works or not, we'll have to wait and see. But these are the things that make you look at it really, really closely. One thing you can be sure of, folks, it's much better to be buying Apple at the 95.50 than be buying it at 103 last night, or at 115, or at the top at 131 when they were telling us, what a wonderful company there. And they are a wonderful company, no question about it. It's just being perceived differently than it was 6 or 7 months ago. This was the darling of 2015, yet everybody that bought it has a loss. Something's wrong somewhere. I'm just looking at it on a technical basis here. That's all I'm looking at it. Okay, now yesterday, the market had a pretty good run up to the 1904 level. The good part is we didn't back off very much at all. We came down 25 points down to the 1878 level, which held relatively well. The Dow was down 120 last night. S&P was down about 15 or 16, and now we're back to pretty much unchanged on the day. We'll see what happens. Remember, this is the last day that we had for the transits to be negative, and so we'll see what happens. 877-927-6640.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, boys and girls, we've had a question about our overall opinion of gold, and my opinion has to be on the bearish side because of the fact that we've completed this ABCD pattern. We've completed the ABCD pattern in silver, which was also at a 382 level, going back from last November. Last April, and so it's a very, very bearish pattern, and also platinum also came in to the area where it was going to have a little bit of a problem because it was right at the 786. So that's the reasoning in platinum. The other request that we had is if I would repeat the elements of the three things necessary, to put a trade on, the three questions that you need to ask yourself. This comes from a seminar that was done by Mark Douglas 25 years ago and myself in Chicago. We conducted a 5-day seminar where we traded live every day. We would do early in the morning before the markets open. Remember, we didn't have the pre-market stuff, Globex type stuff then. It was all regular hours type thing. So we would start early, and Mark would start with the psychology. I would do some trading, put some trades on, and then what we would do, we would come in and put a situation where we would be either profitable or not profitable. And we made a guarantee that if it wasn't profitable, then we would we would give them their money back. Fortunately, we were lucky all during those seminars. We only did 3 of them over the years. We did one every 2 years for 6 years, and then we didn't do any after that. I don't know. Mark just didn't want to do it. Neither did I. So anyway, with the way Apple's acting right now, it's a good thing we didn't have Apple on today, because everybody would be getting their money back so far anyway, because we got a 35-cent loss, 40-cent loss, 47-cent loss. Okay, let's take a look. The reason why this was based on a seminar, part of the seminar they talked about, to being a trader is you have to have an absolute foundation of trust in yourself. And the only way you do that is to develop skills. Your 2 skills that you need is you have to be able to perceive an opportunity, And the second thing you have to do is to have a methodology that you believe in. And I believe in sacred numbers. I believe in patterns. That's what my shtick is. And then you have to ask yourself 3 questions. These were very similar to the questions that Amos Hofstetter had on his desk at Commodity Corp there on Mount Lucas Road in Princeton. He had these questions. It was, is it a valid signal? Yes. How much do I have to risk to see if I'm right? Is it acceptable? Sure, it's acceptable. Couple bucks. 3, if you can accept the risk, then you must take the trade. And the reason for that is we are dealing in probabilities, folks. We never know which trades are going to work, do we? And we never know how much we're going to make on a trade if we make anything, are we? No, we don't know that either. So the only thing we can do is protect our backside, and that's to define the risk, and that's really what we're looking at here. So that's what we have to look at. Oh, we got a caller in from Philly, the Snowman. John, are you there?
Larry, I wanted to tell you I'm disappointed that your departure from the city of brotherly love occurred just ahead of my arrival. So we'll try sometime in the future. But yeah, it's a nice snowstorm last weekend.
Yeah, Mom said when you see a snowstorm coming, get out of town. So that's what happened. No, the kids threw us out. We were there 6 weeks, and the little ones wanted us to stay, but Mom and Dad said we've had enough. We spoil them too much. We spoil them too much, so we're back now. But we'll go back soon enough. What can I do for you, my friend? Yep.
Wanted to ask you if you could just elaborate upon gold. You made the comment just now that the rally pattern in gold looks complete. Therefore, longs are not attractive right here. And I see what you're looking at, the December 31st to January 8th rally, 57 up to 1113. And then the January 14th low, 1071 up to 1123 yesterday. Nice ABCD pattern. Can you share with us, please, and perhaps show an hourly or a 30-minute chart, where or what sort of decline that would show up for you as being a low-risk repurchase, assuming the market doesn't surpass the mid-1120s here?
Sure. Let me do this, John. What I'll do is I'll put up the chart that I had posted yesterday. Now, we made a higher high, yesterday than on the 26th late in the day. This is a chart that I have. I'll just put this up so everybody can take a look at it. But if we look at this chart, we made a low in gold at 1071, and then we rallied up $50, correct? Up
Correct.
to 1124. So if we take $50 times 0.618, that's going to be $30 roughly. So a $30 correction from 1025 would take you down here to right around 1092, and that would be a place where you would be looking to buy it. The last correction that we had back in January went from 1116 down to 1171. We came down $40. So this one should only come down $30 if it's a really bullish market. Anything below 1092 is going to tell us that, we might even get all the way down to 1062. So that's what I'm watching as far as retracement on this. The key is the silver market. Silver looks really bad, buddy. It's not got the oomph. Now, as you know as well as I do, silver can change in a heartbeat and explode through there. And if it does, there's not going to be anybody more bullish than me, because I think gold still has a chance to be the big surprise along with crude oil for 2016. But that's what I'm watching right now.
Larry, thank you so much. That line of reasoning, just going through the numbers on gold, setting up preparations for subsequent action, that's really helpful. That's exactly what I was looking for, to hear that kind of thought process. So thanks a bunch, and I wish you well, and bon voyage over to Asia.
Yes, we'll have some fun. And we'll see you probably in May or June for sure, John.
Excellent. Thanks so much.
Thanks for calling in. Okay, folks, we're going to have a break coming up here pretty soon. Then we'll get back to some of the other markets. But we're selling off a little bit here in Apple. We got down to 94. How low do we get? 94.70. So that's about 80 cents under where I suggested buying it. But use a $2 stop. So if you get to 93.50, throw in the towel and bring out the horses and ride out to Tucson and have a glass of wine with me, and we'll discuss what went wrong. But has everything in it that you'd possibly ask for. But remember, if this fails at the at this level here, what we will have is nothing more than a 1.27 number coming in at 90.50. But I don't want to risk $5 in Apple. I would rather risk $2 and then buy it back again at 90.50 when it makes a 3 drive to a bottom pattern, because longer term it's still got a chance to turn in here, especially when everybody's turning bearish, and that's usually the time that you want to keep an eye on it. But anyway, it's just nothing more than a pattern trade, folks. That's all it is. Nothing more, nothing less. And that's pretty much, just keep that in mind. It's all probabilities. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've been asked by several people here in the Tiger TV, our TFNN family, are the people that log into the Tiger Den, and then also they drop emails. One was email, one was from the den itself, but they asked me to discuss a little bit about the foreign exchange markets and the difference in size. This comes from the UK, one of the largest largest brokerage. In fact, it's the largest forex trading is Deutsche Bank, and if you know what that stock looks like. But as you can see, the foreign exchange market is $5 trillion average daily trading volume, as opposed to the New York Stock Exchange, 24 billion, 22 billion, Tokyo 18 billion, and London 7 billion. So you can imagine how big foreign exchange is. That's looking at 26 different currencies, and of course there are cross rates between the two, so you can get all kinds of iterations of those things. But the major currencies are the euro, the pound, the yen, the Swiss, the Canadian, and the Australian. Those are the big six against the US dollar. And then of course the pound, yen, euro, yen, those are all big also. But it's just a huge market. It trades 24 hours a day, 5.5 days a week, and so it gives a pretty good pretty good move of what we're looking at here as we go. We've had another question about the grain markets. They're moving a little bit today, which is good. I do believe this market is going to have a pretty good opportunity sometime during the spring here, because we got planning intentions will be coming out pretty soon. I was going to have Rich Anderson on today, but he's incommunicado traveling, so we'll try to have him on next week. Tomorrow we're going to have John Hill on, my mentor, and he'll give you his experience of 90 years and the people that he's met, and you can ask him some questions. Friday we're going to have Ed Carlson from the Market Technicians Associations out of Seattle. He's the specialist on George Lindsay, some great cycle work from the 40s and 50s. And Tuesday we got Stan Harley, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.